Hi, good evening. This is Saturday evening. It's almost quarter to 10, 9:45 p.m. I'm just actually making a video, but if I try to make it short, then I won't be able to explain it well and it won't be helpful. So I'm just trying to make a video, show you just a little bit of what I do and maybe like just the beginning thing, right? So you can see this chart that's doesn't matter what the instrument is. I'll just show you what there are like three things I look at in the market. So let's see. In this one you can see this is I look at consolidation, retracement, expansion and reversal. So if you look at this, maybe like the market was going up over here, right? It was going up, and this can be retracement, right? It came all the way down, maybe. So this is retracement. Okay, so that's one, and then the other one is studio retracement, and then the other one consolidation. So like this one, you can see it's been consolidating in a range. So this is like consolidation phrase, right? So that's consolidation. That was a retracement consolidation, and then the other one is like if you look at this is an expansion. This goes like this is expansion, and then there's a retracement in it, and another expansion leg down. So you can call this as expansion, and then you can look at over here also. This is also like expansion, and then over here you can see there's consolidation. So if it consolidate, what can happen is if it's consolidating, say in a range, right? It can either expand to the upside or to the downside, right? But I'll just show you the bullish side. So it can expand, right? It can expand and then it can retrace. So if it's just a little, then that's like a retrace, and then again it can expand to the upside, right? But if it and then the other one is like say it's in the consolidation phrase, right? It can expand and then it can, instead of retrace, right, it can sorry, instead of what was it, yeah, instead of retrace it can do a reversal, full reversal, right? It will come back to its origin or even if it goes down. So this is uh, retrace, reversal, sorry, that's a reversal. So that's the phrase: consolidation, expansion, expansion, consolidation, and maybe then retracement, retrace all the way. Okay, so this is Bitcoin instrument. So I'm not going to show anything on this one. Let me take you to, let's go to Google, since I've been showing you for on the last, I think so 1-2 videos, right? So if you go to Google, so let's see, that's your gold, silver, and that's a Google. So let me show you one more thing, right? I always talk about liquidity. So if you're long in Google, say from here, you buy Google, right? You're long. And then again there's a leg up, right? So if you're long and then it goes all the way up, what you do is you have your stops right here. And some of them, they will see when there's another leg up, right? They'll try to get their stops up in the upside, maybe over here, or if they're going long from this area, they'll put their stops right here under this. So there are stops here and then there are stops here. So you're here, right? So if you are now on the top side, right, and the market is falling down, so now these guys, they are thinking the market is going to fall, right? So now they're going to go short. So when they're going short, they are having their stops right here on top. It goes down, right? Comes, pulls back, and now it's going down. Just an example, right? So they'll, now it starts going down. They'll get the stops over here at this level. They'll try to protect their profits, so they'll try to adjust their stops down, maybe here as it goes down, right? So that's the liquidity that I talk about. So if the market is, I'll just be alright. If there's a this is the market price, right? And say the stock comes down and from here it starts rallying up, right? So at this point, you should know what market means, what orders are over here, right? So what orders do you think will be here? Things. So when you're going long, right? If they're going long from here, they're going to have their sell side right here. Sell side first, and then the guys who are thinking of when it's falling down from here, right? So they think this is like a area where there is support or support, say, right? And they think, yo, if it's going to break down, right? What they're going to do is they're going to add their short positions under this area, right? So the stop loss, short positions, and the guys that are like, they're going to take the new positions, they're going to keep the stop loss. So what I'm trying to say is you should know what orders are orders are placed under this, and then what if it's going if they're going short, right? What orders will be on top of this price area. So it's going to be like the if the market is going down, what orders are going to be on top. Just a short thing. So you can, since I told you the bottom, like you can not Google, means just take a look at it and try to guess what it is. So if you had placed an order in the market, you know what orders, like order cancels order, right? OTs, OTO. So what are those orders? Let me go in the chat, and maybe if you have question, I can answer it later, like what orders are placed over there. So now we are looking at Google chart. Let me get the cursor. Okay. So here you can see there's the Google, right? But we are going to take a look at this part right here. Sorry. So I'm going to show this is 1 week that went up that I was talking about, and this is the other week that just came down. So when I explained to you about the weekly or hourly or daily, look at this daily candlestick, right? This was on Wednesday. It went like came little down and went up to the highs and then closed at the high, but it didn't close all the way on top, right? So if I show you the weekly candlestick, so this is that's the weekly candlestick, right? This is the week that I showed you how the market went up, right? And this is what happened uh, this last week from Monday to Friday. So let me break it down a little bit. And then this comes the daily. So daily is Monday, Tuesday, Wednesday, Thursday, Friday, and then this is another week: Monday, Tuesday, Wednesday, Thursday, and Friday. Let me go to lower time frame. So this is 4 hours. This is last week up week, and this is the week down week. Let me take it to 1 hour time frame. So let's break it down. I'll just show you how I was looking at it. So what I said is when the weekly candlestick forms, right? Now I showed it in the other video, so you can take a look at it like the weekly. What happens is over here. Let's go. This is Sunday. This is the we are not looking at this data, right? So come Sunday, like Monday, right? The market opened here. Okay, so the market opened. Let me draw a so market opened, it came down. It came down Tuesday, it came down, right? And then it started rallying. So when you're looking at the weekly candlestick, right? This is forming the wick of the candle, and then from here it started going like really nice up, right? And then over here, that's Thursday. What it did on Friday is it went all the way up, but it closed down. So this other part was the wick, just it went up, and then this is the whole body, you can see, that formed the bulk of the trading, like going upside, right? And then what happened the week on Monday? It was the opposite. So what happened is this is Friday, so it was closed down, and then Monday it opened right here. Okay, let's put a candlestick. So Monday, see, Friday, Monday. Okay, so Monday it opened over here. So Monday it opened, and then what happened is it rallied up. So when it rallied up, it was forming the bearish candlestick for the week, right? So this is the wick that formed on Monday, and then Tuesday it came down. Wednesday it went all the way down, right? And then Thursday it came all the way down here. Okay. Thursday it came, the lows was right here Thursday, right? But then Friday it went up and closed up. So this is the wick, the bottom wick of that candle. So this is how I look at the weekly or daily. See this hour also, if you look at the candle, you're going to get the same pattern. That's what I'm trying to show you. So let me see if there was like the way I look at it on. Okay. So Monday what happened is it took the liquidity right here. You can see this is the highs from Friday. So what it did is it rallied, and that was the higher idea. It went above that level. So see. So where this is all the longs up, right? When they're thinking, oh, when it breaks up, it's bullish, right? So everyone was, this is the buy side, and then the market makers were going and taking the buy side at the premium. They'll take the price at the premium and then they'll sell it at a discount and make a profit. So when they took this one, what happened is, like, I look at the market structure break, right? So if I'm looking at the market structure break, I'm looking at which candle. So let me show you what I'm looking at. Okay, so right now what I'm looking at is the price is going up, low, higher high. This is higher high, and then it, so I'm looking at like a market structure break, right? So this is high, lower high, higher high, right? And when it takes down this part, right, it's breaking down from here. So that is where the market structure changes, right? From bullish to bearish. So once it takes down this, and that too like kind of aggressive when it goes below. So it takes the liquidity up here and then it comes all the way down. And then if it breaks this high, right, the higher high over here, that means the structure, the market structure has shifted from bullish to bearish. So what happened here is it went and took the liquidity high. So this was, you can see this green candlestick right here. So let me remove this somewhere else. So this, it took the liquidity and it came down, but you can see this is high, this is lower high, and this is higher high. So this is high, lower high, and then it went higher high, right? So I am looking at this. You can see this blue candlestick. I am looking at the break of this one. So once it breaks this lower high, right, that means the market structure has changed. So let me, I'll just share, this is the, I'm taking the green candlestick, the full green candlestick, right? Okay, well, let me just take it till here. So I've taken the top till the bottom, right? This is the candle that I'm watching it. And then it, when it breaks this level, that means for me the market has shifted to the sell side. Let me remove this off. So it came down, and then the next level I'm looking at is this gap right here, like I showed you the gap. This is the candlestick, the top candlestick, the wick, the bottom candlestick, the wick, right? So I'll take that one. There's the top and then there's the bottom. That's the level. Okay. And this is another liquidity area. You can see these two, three candles at the bottom, so that's liquidity below it. So there's a liquidity taken out right here. Okay, so now So this was the previous week. It was bullish, right? And then here you can see the market structures change. So then I am looking at this candlestick because the market structure have changed. So what happened is it came down, the market structure has changed, and it tried to go up, right? See, there's kind of, now you can say there's some kind of resistance, right, over here. Then it comes down, and then again it goes up to that level, and then it breaks down. Over here it's going to this gap right here. You can see this. If you notice over here, right, you can see what happened is I look at candlestick, but I don't look at the patterns, right? Bullish candlestick or hammer, indecision, gravestone doji, or whatever it is. What is that? Morning star, evening star. I don't look at those kind of, but I just look at the body and the wick. So if you look at these two candlesticks right here, you can see what did the wick do is it pierced through it, right? But the bodies, they respected this level, the gap level. You can see the bodies, both the bodies closed below this level, and then it came all the way down, right? And like over here, you see this is the green, right? Candle bodies all the way up. So there is only buy side over here. So if there is buy side, there is no sell side over here. So what happens is sometimes immediately like this one, like there was buy side, immediately the sell side came in, right? But sometimes it take time. So over here it took time, and this is where it delivered the sell side. Here all the delivery was to the upside, the buy side. There was no sell side going on, and then here it comes to the sell side. So now the price action is fulfilled. And if you look over here on top, like I'll show you how I would have traded it. This is all hindsight, okay? So we have to do this every day, like just to get a feel of the market. It's not like I'm not going to say, oh, now this happened, so I'm bullish or bearish. You don't have to do that. When you're practicing price action, you just have to go and read the market. After it is done, it's better to do that way. So you can see like where you would have gone long or short, and like once you're good at looking at it, then you can go and do like not trade. I don't recommend trading, but like you can go then look at the live data also and see if you can read the live data chart, right? So over here, this I was talking about this green candlestick, and then I took the whole candlestick, right? I put this area just for visual. And then over here you can see what happened is it came down, it took the sell side right here, it didn't go all that high, right? If you see this, both the candlestick, you can see this one, it just went little high and took the sell side. Sorry, it took the buy side, right? It took the buy side and then it came down. So there was a, here you can see. So now what I'm looking at is this candle, right? Now since it broken the market like to the bullish side, now it's going to be the bearish side that we'll be looking at, right? So let me remove this, or maybe just get it. So after when it breaks that area, right, now I'm looking at this green candlestick, right? Okay, let me remove this. Okay. So now see, this is like a, you can see this green candlestick, but then I'm looking it as a bearish, right? Since the market is going down, this is a bearish order block that I'm looking at. So once that they're in place, then I'm looking at this gap right here to get in a trade, right? So that's the top and bottom of the red candlestick, not the long one, the one before it and the one after it. So that's what I'm looking at. That's a gap. So there is only sell side delivery over here. So since there is a gap, I'll be looking for candles that will go in and then I'll be going short. Yes, I'm not going to explain. There's a lot of things, but just trying to give you a short view. So once the candles go in here, right, I'm going to go short. So if it's this one, right, you can see the wick was up. It went little above that, right? But the bodies are still inside this area. So I can go short over here, right? So if it goes short, here you go. What I did is I took this liquidity, or not liquidity, this is a gap from the bullish side, right? If you look at our what, how did it respect it? It took the buy side all the way, just the wicks took all the buy side and then it went back. But over here, you got another chance, like it came down over here and then you got another chance, right? This green wick, it came, went all the way inside and you could have got the second chance to go short over here. So once you go short, you can. So there is. If you look at this also, this is also kind of a gap over here. This two, right? So it traded. You can see it traded like whipsaw. It was trying to trade up down. It went down. Then again it went shot up and then came down. And once you're in the trade, right? You're I will be looking for a liquidity in the sense like this kind liquidity to when you bought it up here right at premium you want to sell it at a discount. So this is the liquidity I'm talking about. So once you're in the trade you would be looking to get out at this liquidity area. What did it do? It came, see, just a wick, it just came down, wicked and then rallied up. So this is in Google that I was looking. Let me see if I can look anything in the S&P or Nasdaq. Let me go to the daily. It's Nifty, Amazon. That is your pound dollar E-mini. This is 10 years Nifty, Bank Nifty. Tesla doesn't have a real good market structure, so I will leave Tesla on its own. Let's go to this is your crude oil, and this is E-mini S&P 500, and this is Nasdaq. So let's take a look at Nasdaq. This is a daily, right? Let's go into 4 hours. Okay, let's go into hourly. So that's Friday's price action right here. If you remember, but that was E-mini S&P that I was showing. It came down and then I said the market structure was right here. Let's see. Now let me show you the Nasdaq. Okay, we'll look at this price action, right? This is, you can see now it's an hourly, right? Hourly time frame. So these two candles are like this is hour. Which hour is this? This is at 1 o'clock and this is at 2 o'clock. So this is both are hourly. Now we looked at weekly the bullish structure and then the bear structure, right? That was on a weekly basis. Now this is in the hourly, and let's take a look at it when you break it down, right? This is 1 hour, this is the next hour. So the same thing you can look at if you're looking at the price action, right? Let's see what we can look inside this 2 hours, right? Let me take it in a 15 minutes chart. So this is a 15-minute chart, and one sec. Okay. Okay, so this is that was the 1 hour candlestick. Now we broke it into 15 minutes, right? Then let's take a look at it at 5 minutes. So this is the square. Okay, so this is going up. That was 1 hour bullish candlestick, and then this next hour going down, right? So let's take a look at it in a smaller time frame. So it's going to be the same thing in, even if you look at weekly, hourly, daily. Okay, so here we can see what happened is the price went down, right? The candlestick opened right here and it went down. So that's the wick forming for the hourly, and then it went up. It started going up here, little consolidation, and then again retracement, right? And then if you see the same pattern over here, this is high, this is low, this is the higher high, and then here you can see the break to the downside, break the market structure shift to the downside, and here it's gone all the way down. And then let me see if you can see it in clearer in 1 minute. Yep, this is much clearer, right? So you can see here it went up, it's down, right? Nice strong move up. Okay, if I can see, this is expansion, retracement, expansion, second leg up, consolidation, then again expansion, retracement, expansion. Then this is market structure break over here. So that is retracement, right? All the waves going down. But over here also we have expansion. This is a retracement, expansion, consolidation, expansion, then again retracement. This is market maker. This side is the buy side, this side is the sell side. Okay, you can see the market went up. That's it went up, retrace, nice way up, right? So let me show. This was a buy side. That's a nice one, and I can show you how would I be able to get in the market, right? And then what happened is it came down, took the liquidity right here, and then it came up, buy side liquidity on top here. You can see this. All this is liquidity right here. It came, took the buy side liquidity. Now it's only interested in taking the buy side, right? Yeah, if you look on this side chart, liquidity right here. Let me point it. Okay, this now becomes old high, right? For from the left side. So it took this liquidity when going up, right? And then over here took this liquidity, nicely consolidated, taking out all this liquidity. Nice. Taking out this liquidity right here. And then what it did is it came down, lower high, went up, took this liquidity right here. So once it took this liquidity, we are still going long, right? But then what I'm watching is this was low, sorry, higher high, higher low, and then higher high, right? And then it broke this point, so the market structure has shifted to the downside. This green candlestick right here is when it breaks. That's market structure shift to the downside, right? Then it came, you can see over here almost started going down. So that's the sell side. If I can let's go 5 minutes. Let's see. Just a little bit I'll show you how would I enter the market over here. Get everything out. Okay, so now here we are looking at the market structure break, right? So once it break, this is the bearish order block I'm looking at it. Okay, and then there is a displacement to the downside, right? So like I show you my gap, right? So this is where I'll be looking for the entry. This is all, you can see this is red candlestick all the way down, right? So it's all only sell side was going down. So there is this green candlestick that will go and fill this gap right here. So this is your top, and then the bottom you can see the green one candlestick, right? So here is how I would enter it. So once it came down, oh sorry, I was on the other side. I'm not sure if you're able to hear me. And it's almost past 10:30 now, almost 10:22. So let me finish it soon. So this is the area that I'm looking to get short. So if you look at the candlesticks, you can see just the wicks. So it is respecting this area, right? The green candle, it comes, it wicks in here, it wicks a little up. So I'm going to go short over here, and it's going to be what time, like two something, right? I still have some time, and I just trade mornings from 10 to 11, and then from 2 to 4, 2 to 3, something like that. I'm not going to be trading the whole day. I just have this limited time, right? So that's your sell side. I would have gone, and where is your liquidity? If you have the answer, you get 10 points for it. Okay, so if your answer would have been here, this is the liquidity that I would be looking for, all the way down from 06 to 55. Oh, that's quite good, but this is Nasdaq. So that's how I would have traded on Friday. Means you don't have to go and trade it, right? You have to just study it and read the charts. Even after the market, it's much easier instead of putting all stress on your brains. Oh, this and that. It's better to go and look for your patterns after the market is closed. So this is how it's going on, and kind of it's really doing good for me, and I'm still going to spend a lot of time in it. And maybe this is the last video before I post another video. So we are going to have some time before I post a new video. Hope you enjoyed it, and good night. Then another video is done.